Really happy with the execution that I had on silver the other day. So half of it was yesterday, and the other was sort of a intraday small swing. So we had an entry down here at 31.16, closed out at 31.48. But during this period, we had drawdown, and I've said before, I don't see any issues scaling into losing trades as long as you have your strategy and you have risk management set properly. I really don't believe in scaling into trades just because you're losing and want to fix it. So obviously there are reasons I scaled in, which I can cover if you want to, but if you're not bothered about that, that's fine. So closed out here. And then we had, I was a bit salty. I missed this move, but again, I saw a statistical play come in. So right as market closed, so I think it was about 9:30 p.m. for me, UK time. Took a short position, closed that one for profit right here, and now I'm back in for a long position on a more of a swing trade basis. So there you go. Just wanted to show off that sort of milking on silver that I did because it was very good. So open positions, obviously we've got silver, we've got pound Swiss to the long side. This is mainly trading rate divergence. Obviously we've got the Bank of England holding rates at 5%, and they're not really, or it doesn't seem like they're in much of a rush to start cutting. So we've got that, and then we've got the S&B as well, that essentially is looking to cut, or it sounds like they're going to cut. And we also have a declining trade balance for the Swiss as well. So overall, that trade looks great. We are also in pound yen to the long side. Very similar thing here. We've got the Bank of England holding rates. We have also got the Bank of Japan sounding quite dovish. Essentially, to me, anyway, it sounds like they're not going to be cutting rates for the foreseeable future, or the near term anyway. S&P 500, I'm in long here as well. So looking essentially for the 6,000 level. Now, don't get me wrong, I'm not looking for a 14% trade here. I am more looking at 6,000 over the next couple of months. So I'll see how this one goes. I might close out if we do manage to break out and create new all-time highs. And yeah, we'll sort of manage this one as it goes. But so far, so good. We're still stuck on this resistance level, which of course is fine. We've got a couple of minutes until NYSE. I did take a long position on Bitcoin as well. However, this one isn't working out too great. I'm not a crypto trader, really. It's more, this was just technical play. So this one isn't doing too hot, which is fine. It was more of one of those trades where the technicals on the lower time frame were very compelling. And I was happy to take that risk. And I completely understood I didn't actually have any fundamental backing. Pound dollar should be quite an obvious one. Obviously, the Fed is quite dovish. It seems like they're in a cutting cycle now after they've had a 50 basis point cut. And it's so far seems like they will cut again in November. And again, going back to the Bank of England, they've held rates, and it doesn't sound like they'll be cutting. And if they do, it'll probably be 25 basis points, not 50. So we have a bit of a rate divergence there. Also, finally, in oil longs, so here you can see very clear trend to the upside. We've got oil inventories coming out pretty soon. So here we can see, oh, actually that's the wrong page. Here we can see a projected decrease. So essentially if inventories are down, or we get lower than expected inventories, there's essentially an increase in demand. If this comes out higher, then we get a decrease in demand. So pair that with technicals, and we've got quite a nice potential trade here that's so far doing so well. James, what happened to your Microsoft idea? To be honest, I couldn't materialize it. I actually think it worked out quite well. Should we take a look? Oh, this is the H1. It was the H4. Yeah, so it was something, I can't remember exactly where it was. It was somewhere around here. I was looking to go long, but I didn't take it because I just didn't, I'm not a stock trader. Seasonally and technically it looked great, but for me, I normally need a lot more than that. I like to have a bit more of a substantial reason for a trade. So as we go into the day, we have got the DAX 40 down 0.4%. We've got the Nikkei up 0.7. We've got NASDAQ down 0.18. The FTSE or UK 100, we've got up 0.15. The Dow Jones is flat and the S&P is down 0.1%. Oh, this is the daily. Yeah. Change percent. I think I might have got this percentages a bit wrong. Is Nick still gone? Yes, it looks like it. I think Athens was the last thing I saw on his social media. So in the Greece. Let's see. What pair was that? I think you're talking about silver, the one I was looking at first time.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
US dollar Swiss, let's take a look. So, I mean, we are still seeing this consolidation. There's no movements either way, really. We do have the Swiss that is viewed as overvalued. So I'm not looking really to be going into this one. Although the S&B has said that they are okay with it, or it's projected they're okay with the overvalued Swiss for now. That won't last forever. And of course, the Fed is looking to cut rates. So if we're looking more to build a forecast for dollar Swiss, I don't have one, because if the Swiss starts to lose value, and obviously I expect the dollar to continue to lose value, then we're trading two weak currencies against each other. So really, I think short side has more potential because, as I said, the Swiss is overvalued, but it's looking sustainable for now. So yeah, I think a short-term sell would be more ideal than going long. But yeah, it's not something I will look to trade. Can we buy USD JPY now? Can we buy USD JPY now? I was actually selling dollar yen this morning and got stopped out. It's difficult. It's a difficult one to say. I wouldn't really be looking to do anything here. I think pound yen and essentially all the other yen pairs, apart from dollar yen, have more potential. So the problem is the dollar is quite weak and the yen is quite weak. So when we've got assets such as euro yen, pound yen, I just don't see a reason to go and trade dollar yen. I think, actually, let me check the edge finder. I think there's some yen pairs that are bullish on here. Let's get rid of the neutral. So we've got Swiss yen, CAD yen, New Zealand yen. So you've got three yen pairs here that are signaling bullish. So yeah, in my opinion, going in for a dollar yen long when you've got better options, it doesn't make much sense. Watch list. Let's take a look at what we've got. Of course, still watching gold. However, what can we really do here? You know, there's no choice on gold really other than to wait. I have been looking at day trading gold, but even so, it's just so extended. I really want to see a pullback on gold, but of course it doesn't matter what I want. I need to wait and see what happens. The Russell slowly declining to the downside, however, nothing too dramatic. I think I'm going to scrap my idea here. I might come back to the drawing board on Russell, but yeah, for now, scrapping it. Australian dollar, US dollar. This one, again, in my opinion, seems quite good to the long side, but it's just a case of waiting for the pullback. Reason is we've got rising commodity prices. We've got improving Chinese data, and obviously the Australian dollar is very heavily driven by Chinese data and commodity prices. So if you, for example, if you look at copper, which I'll get onto in a minute, that's on the watch list. Copper's rising quite nicely. And then we take a look at the US dollar, again, looking for a weak US dollar as we see potentially another rate cut in November. Euro dollar, I'm a little bit on the fence here. I am more on the long side. but even so, I'm not willing to take a trade on euro dollar. It's more just on the watch list to keep an eye on it rather than to place a trade. So copper is juicy. Essentially, I don't really see anything in the way to stop copper. So essentially what's happened is there's been more stimulus in China, which then increases the demand for industrial commodities like copper. So what we're seeing is obviously a rising price, but it's a similar situation to gold in terms of if you're not already in, you can't really get into it because yes, we had a pullback this morning. However, it's not, in my opinion, for a swing trade, it's not a deep enough pullback. I really need to see a pullback down to this daily, H4 and daily level of structure. And this would also meet the 50% level quite nicely. So essentially just waiting for a pullback here. Australian New Zealand dollar bearish. I would suggest the Australian New Zealand is actually more bullish than bearish, but I haven't looked at the chart for a while, so let's see. Yeah, the reason I'd say bullish is for the same facts I've already said. Strengthening Chinese data, rising commodity prices benefits the Australian dollar quite well. New Zealand dollar, you know, it's okay, but in my opinion, there's nothing really there to drive a New Zealand dollar significantly anyway. Solmo Motion TV, please show me love. Okay, I'm sending my love to you. There you go. Harry wants to look at US dollar CAD. Let's have a look. So it looks like I was already going in for a short here. It's actually a bit disappointing. I was short on the US dollar CAD not too long ago. It was right before we had, in fact, it was the day that we had FOMC. And was it here? Yeah, I think it was around here. So I was short off this 50% level and this level of resistance. However, it was at the time, it was only technicals. And I didn't want to hold it through FOMC because at the time I was more expecting a 25 basis point cut. And from that, I would have expected some slight bullish movements. However, obviously the opposite happened. So I didn't really capitalize on this, but the idea hasn't changed. I would be quite happy to go short on the dollar CAD. This actually looks quite nice, really. So we've got this fib level here. So we've got the 0.618 and the 0.5, and some slight structure through here. It's nothing too major, but it could be used as a sort of new resistance. Stops just above this traffic that we've got here and the wick. This would also allow room for the 200 moving average. Take profit down at the fib extension. And actually, let's see. We may be able to get something here. Actually, maybe just put it at this larger or longer term trend line that we've got going on. Yeah, I think dollar CAD to the short side actually looks quite good. So we'll see how that goes. Euro CAD longs. Let's see. What I'm going to do actually is just have a look at some of the research. I'm not too updated on what's going on with the Canadian dollar at the moment. Just give me a second to find it. Here we go. So for the CAD, the CAD has gained strength against the US dollar post FOMC as the USD shows signs of weakness. CAD tends to benefit from strong oil prices, which were also supported by expectations of higher demand with lower US rates. USD CAD dropped, strengthened, backed by stronger oil prices. So at the moment, the only thing notable about the Canadian dollar is oil. And if oil is gaining strength, like I'm expecting it to, then we can expect some CAD strength, which obviously wouldn't really work for Euro CAD long. So yeah, this one would be, in my opinion, trading two relatively strong currencies against each other. The Eurozone data is improving. And obviously, like I said, we've got slightly rising oil prices, I expect. So yeah, we'll see.
Yeah, I had 3 winners on SPX this morning, so I'd say it's a good start. I'm not complaining.
Already?
Yeah, I took them all like around opening bell. They were just little SPX trades.
Is it a strangle?
Pretty much. Yep. So CAD Swiss, if we have a 3-wave symmetry, it's right here. I'm actually looking for a 5th wave to get us back into this high around 67. 67 to 68 would be a pretty good take profit. Longer term, it's all the way up here. We probably need to see oil stay resilient. We need to see a much weaker wave of weakness on the Swiss franc. So I don't know how aggressive I'm going to be on the CAD Swiss, but if we get to 67 or 68, I'll assess my profit. I also could see this one. If we come back up here for some like larger pattern, then maybe I trade it again, get back to this high, and then project the symmetry like so. So I think phase 1 is going to be, let's see if we can get up towards symmetry here or these highs. That'd be 1, 2, 3, 4, 5. We get there, take some profit. And then if we get a pullback, reload, and look at the bigger symmetry there. So again, this has been a year and a half in the making. So don't think like, where's he coming with this stuff? I have been tracking, almost stalking, almost obsessing over the Swiss pairs for a while. And I'm just trading them. But it's hopefully going to be like patterns in the making. Hopefully this is one of those positions where, one of my favorite things to do in the Forex market is invest, where I like the trade. I'm getting paid to hold the trade. This is what's nice about positive swap right now. And it's also not the Japanese yen. Like everyone was doing the carry trade and killing down the yen crosses with carry. I had very little to do with that. I hate the yen and I still will hate the yen forever. But dollar Swiss, so CAD Swiss is fine. Euro Swiss looking better, right? Looking better. I'd like to see the Euro Swiss back up towards parity at that would be 1.00. Pound Swiss, I'm trying to hold long back up to 117, but my profit target's 120. And then New Zealand Swiss, this one's looking much better. Let me plot some symmetry here, but I'd like to get back to the highs at 56. There's a round number at 6,000 as well. I'm going to plot the symmetry, Frank, and then you and I can tag team some trades. By the way, Micron has earnings today if you want to revisit that with me. I don't know if we looked at that on Monday or not. Did we? Did we look at Micron together?
No, we didn't.
Okay. So if I get symmetry on the New Zealand Swiss, that's around 55, 50. And there's obviously some momentum right up there. There's a nice little pocket, lots of structure right around that 5,600 handle. So yeah, we'll see. But symmetry is going to be my first target on a lot of these pairs. And then dollar Swiss, final one. It's hanging in there. We essentially have like a flash crash double bottom. If the Swiss gets weaker, I'd love to see this happen, where the dollar just, because of the Swiss franc getting weaker, maybe the dollar survives, even though the DXY is still a mess. In fact, let's go to the DXY. It's still a mess, and be freaking careful on these fake outs, man. I think this is bear trap written all over it. So I'm not taking the bait. I'm trying to outsmart the trap that's set there. So I'm pulling like a Bugs Bunny, and I'm not selling anything. So, and I said this yesterday, if I want to see a bearish dollar, the best way that I can make money like that is just holding assets long. So if I'm long the stock market, long gold, long silver, long Bitcoin, long anything, if the dollar gets weaker, all these look good. If the dollar gets stronger, well, I deal with whatever chop we might get here and pullbacks we might get, but I'm not necessarily jumping into Forex pairs in the dollar right now. So I think this market is trying to do something. I'm just not sure if it's going to give us all the weakness that we want, or if this thing's going to like rip back and be, something post-election. I really don't know. And I'm not going to sit here and, lose sleep over what's the dollar going to do and what am I going to do with my dollar pairs in Forex. Nothing. If the dollar gets weaker, everything goes up. That's an easier trade for me. So those are my thoughts there. Frank, what do you got for me today? Look at Micron. What else are you going to look at?
I'm trying to look at what could be the top for the S&P today.
Okay.
But it's very choppy. You go on the daily chart, it does look like a reversal here, but it's very early in the day. A lot of these small sell-offs come all the way back up. I was looking at 750 today, 740 to 750 as the top, but I didn't take any trades on the upside, so I'm still kind of in some sort of limbo, I guess, today, but I may end up not taking anything. On top of that, let's see, gold is coming down, which I like to see. Hopefully we get a retracement. I'd like to see probably 100-point retracement if that's possible. But I want to get into that.
Mm-hmm.
And Bitcoin up against some harsh resistance.
Yeah.
It's had a good run. It's like up 20% from the lows this month. But we're at the 200-day moving average. We're on some falling trend line. So, yeah, we're just going to have to see. If this respects it, could come down here to 6,500. And then if it breaks, we could look at a test towards 70K. But overall, I'm hoping that it goes up in the next couple months.
What trend line is that? What auto trend line is that, Frank? Is that a smooth or simple moving average?
It's a simple moving average.
Okay, because I've got an EMA on mine that's price is actually above the EMA, so a little bit more. EMAs are a little bit more aggressive to price than SMAs, but yeah, I was just curious.
Is it bouncing off it, or like how far below
it cut through
price?
It cut through it. So it's prices like when it came down to 50 grand, that was like below the 200, then back above it, then back below it, then back above it. So it's just kind of building a bit of a chop fest right now. The upside is Bitcoin's got to break above 70 to look like the bulls are back in control. Otherwise, I would say this is just a long awaited accumulation zone. And I kind of hope that for an accumulation perspective, I hope we come back to like 52 or 50,000 again so I can re-up. But if we don't, I did add some IBIT exposure. It'll be interesting to see the timeline on the BlackRock ETF. If it's IBIT that gets approved for options, it still has to be approved by the OCC and the CFTC. And if and when that goes live, I do have some core positions on IBIT that I would like to be actively trading options. So I do have, I think everyone has some exposure on IBIT somewhere in here. So I've got between, my lowest account has 71 shares, 100 shares, 300 shares, 400 shares, 200 shares. So I'm up $3,000, but this is one other leg of my portfolio that really hasn't done anything. So I know like Bitcoin is up for the year, and I didn't take any profit either. I was long since like the breakout at 30K. That was late last year, and I still haven't taken any profit on Bitcoin. So I also have just been sitting and waiting like, are we going to 100 grand? And I hope we are, because that is worth the investment. And I've got some, clients involved in that as well.
This is why I think Bitcoin and gold are the trades, is as long as we see this chart come higher, that means we're looking at a faster rate of falling 2-year yields. And in the short term, I think that's going to be good for, things that are basically currencies trading against the dollar. So gold, obviously, we've seen that take off. I think Bitcoin, though, is more of a catch-up trade. So I'm kind of looking into like maybe getting more exposure on Bitcoin before this year's over.
Okay.
Maybe in the next week or so, but I'm kind of bullish Bitcoin. This got beat up so bad, and then it took a while for it to recover. And seeing that it's back up to these levels at like, is it 60 something, 63?
Yep.
I'm kind of thinking that price is going to keep going up as long as yields keep dropping, the dollar gets weaker.
Yeah, I'm looking to. I might have to change this pane. So it's interesting you say the 2-year dropping. The 2-year, 10-year. So now the disinversion is 25 basis points. So we're certainly like disinverting hard. I did take a screenshot of this yesterday. Okay, so the moment that we disinvert, let's go back and have a history lesson on how long did it take for a recession, because it's not instantly. And so we just...
I looked at it this morning.
You looked at this morning?
No, I looked at when the yield curve inverted.
Well, inverted...
or when it disinverted.
Yeah.
It was in June, I think.
So
and then
we
June
did it.
of 2007, and then January of 08 was the first month where things started looking grim.
Yeah. So this is exactly what can you see my screen?
Yeah.
Okay. So this is like okay, so we disinverted and it began 10 months later. So that's pretty much what you were saying, like June, July, says January. So it says 10 months. So whenever that disinversion was, it was 10 months for the recession to begin. December 2000, recession began 4 months later. So this is April 2001. Disinverted June of 1989. Recession began 13 months later. October 1981 began 2 months later. 1980, 3 months later. So it's not a perfect formula of like, oh, it's going to happen right away. Now these 1980, 1981, that was pretty much immediate. 1989, 13 months later, 2000, 4 months later, 2007, the great financial crisis, which is arguably outside of the Great Depression, one of the worst times ever, 10 months later. So are we able to kind of kick the can down the road and see 6 months of leeway, 10 months of leeway? I don't know. So nobody knows. And maybe it's different this time, but something tells me it's probably not. It's just a matter of how overvalued do things get before reality sets in. And I keep going back to this, it's going to be, price is going to lead the way. But and we've talked about this a lot on these sessions. I was very nervous to see the longest inverted yield curve in history finally getting disinverted. There has to be some type of historical, it's going to rhyme. Yes, there's going to be a recession, but is it X amount of months later? We don't know. And the reality is, if we compare this to the S&P, and the S&P for the next 3, 4, 5, 6 months pushes higher, and then has a Q2, Q3, Q4 collapse, well, that might be what triggers the recession. But it might be 6 months later, 8 months later, 10 months later, and then all it becomes is another data point on this chart right here that says, August 2024, recession began, blah, blah, blah later. It's just going to be another piece to this. So I think it's something to note. There's no crystal ball of how quickly it has to begin, but I do think that going from the all-time longest inverted yield curve, I hope it's not the all-time longest recession, because eventually something's gonna hit. But we also have central banks and fiscal policy that have gotten a lot, I wouldn't say smarter, but they've gotten more efficient in terms of they use it a lot more. And so the first reaction by the market is, when's the Fed going to cut rates? When the Fed's going to ease? When we're going to get the Fed put? When's the backstop? And the government right now is spending money like crazy. So it's not a good thing. It's just those tools that have been in play for the last 15 years are staying in play, and they are pretty darn powerful. So anyway, price is ultimately our leading indicator. It's going to be something that, this is why I'm uncomfortable with just staying crazy, blinders on, bullish, and to the moon. I just don't think we go nuts.
Look at 2008 again.
On that inverted yield curve,
which is so the yield curve in 07. So when it disinverted,
yep,
this was March of 07.
Okay.
Was it? Yeah. Okay, so it was January of 08. We were at 1.5%. So the gap was significant, I would say, before we saw any major disruption in the market. Whereas now, it's climbing steadily, but
yeah,
we're still not. We're not really at a very concerning point yet. And even going back to 2007, it inverted again for a little bit. So we're not super sure of this trend. I feel like this has got to start running much higher. We got to be above 1. And at this rate, at the start of this month, it was at 0. So who knows? Maybe in a couple months we could be there.
I think that one interesting factoid from these last couple of years, it's not so much about the number of the disinverted. If we go, right now we're disinverted by 0.25, right? That's the 10 minus the 2. It's a 0.25%. I think it's the rate of change that actually starts to trigger the scary stuff. Because right here, it's like, if you look at 06, we had inverted back in December of 05, inverted in January of 06. We disinverted, but that didn't cause, I mean, there's no recession in 06. No great financial crisis in 06. And then we reinvert, or I should say we invert again, June of 06, disinvert, reinvert. I keep saying that backwards, but it's inverted several times. So we go invert, dis, in, dis, in, dis, in, dis. It just goes back and forth. And then finally, I think it's this that I think is like the sharpest increase. And that's when things get really bad. Like this is by June of 07 into, let's say, August of 07. How are we looking on the stock market in those periods? That's my question. So let me write that down. So we got June and August of 07. So June to August 07. Let's see when this market actually started to crumble. And this may mean absolutely nothing, but if there's anything to take away from it, I think the rate of change might be more important than the actual inverted versus disinversion, right? It's like if we aggressively move higher in that 10 and 2, that could be where all the trouble lies.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.